Hello pro traders. In my previous video, we were looking at a particular candle, a two candlestick pattern, an institutional candle that I call it an FU candle, where we did look at its formation and then its implication on the forex market. But you will realize that within that same video, we actually pointed out areas that we should expect these candles to form. Now, we did said that when we are looking for this type of particular candle, an institutional candle, of course, you should be looking at areas of liquidity where you can actually spot retail traders their stop losses and imaginary places where they can actually place their stop losses. All right, fast forward on the daily time frame of gold. Let's try to understand how price is represented on the 31st of January and then on the 3rd of February. So we have these two candles right here that represented an FU candlestick pattern. Now we did saw that, yes, of course, this particular candle right here, this inverted pin bar or whatever that you call it, I just want to point out that it is a retail trading concept that suggests that price is gonna reverse down after the close of that particular candle. But what did we see? Price actually swept the low of the inverted pin bar and then actually break the high of the inverted pin bar, forming a bullish candle to the upside. Now this is an FU candle, this particular candle right there. Oh, sorry, not that one. This particular candle right here, that is an FU candle. Now it has so many information to tell. Right after the closure of this particular candle, it indicates or confirm the direction of the market. So in a case scenario like we have, for instance, this is a bullish FU candle, so it confirmed the trend to the upside. Like we did so for this past 2 days, price has been bullish. That is the first thing you want to know in terms of institutional FU candle. One, it indicates the direction. So if it is a bullish FU candle, then it means price is going to rally up. If it is a bearish FU candle, then it means price is going to rally down. The next information an FU candle presents on the forex market is that it is a trading signal. Yes, of course, to the direction in which it has formed, we do expect price to rally to that direction. So if it is a bullish FU, so price has to rally to the bullish side. If it is a bearish one, then we expect price to go down. So what we do want to say is that if you see an FU candle form on either time frame, daily time frame, monthly time frame, weekly time frame, 1 hour, 4 hour, then it is a trading signal. So we do expect price, wherever the candle has been formed, we expect price to retest the candle and then give us the bullish move or the bearish move depending on the formation of the FU candle. So in this our case, we have a bullish FU candle which has been formed here. Now we have a retest to the body of the FU candle and then the bullish run continued. Let's get down in time frame 1 hour. Of course, let me show you a trade setup I caught today with the FU candle. So this was a trade setup within the day. Very simple concept applied on the forex market. However, these concepts are powerful and insightful. The question is, how do I come by this particular trade setup? Well, let me do away with this. Of course, it is a 4.5 risk to reward ratio. We actually risked 56 points for 250, which is quite reasonable and applicable on the forex market. Let me do away with this. Let's try and break the trade down. So fast forward, I was looking at price within this range here. So price was it didn't actually consolidate for a while, but it was a consolidation. So we have price moving from here to that point, a deep retracement. Then within here, I actually draw this as a retail. The price actually respected the demand zone right perfectly, and we had the bullish move to the upside. But that wasn't my interest. I was actually looking at the candle that left this triangular zone right here. So this triangle is a retail concept that suggests that price will either break to the upside or price will either break to the downside. My interest wasn't in the direction to which price actually break. I was looking at the candle that actually leaves the triangle. In our case, we have this bearish candle leaving the triangle. And what did we see? Before price left the triangle, we have this doji candle that was generated. Of course, the doji candle suggests liquidity. Now, before that, we have this after the liquidity candle, we have the bearish candle. It swept the up side of the liquidity candle and then break the structure to the downside, obviously engulfing the liquidity candle. Then we have our FU candle that has been formed, this particular candle right there. So now with the FU candle, we did saw that it gives two information. One, it shows direction to the side to which the FU candle has been formed. In our case scenario, it is a bearish FU candle. Then it indicates that price will actually go down. Now it is a trade signal. We are looking for the retest, and we say that the retest happens within the wick of the FU candle. So obviously for accuracy and precision, we are looking at the 50% of the wick. And we have price respecting perfectly from the 50% of the FU candles wick, and then we had the bearish move to the downside. Now our target, it was 2 points that we were looking at. We were looking at this particular price point there and this particular price point there. Why these two places? These are liquidity areas or liquidity point. Liquidity generated in the form of a doji candle, liquidity generated in the form of a doji candle, and we had the two TPs: snap, easy, and simple. So these candles are formed on every time frame, and the information they present is the same information, right? So one, they indicate direction to which the market will go. So if it is a bearish FU candle, the market will actually go down, and if it is a bullish FU candle, the market will actually go up. And two, it is a trade signal. You enter 50% of the FU candle or the retest of the FU candle. It is as simple as that. Don't complicate anything. So when you are looking for these candles, you are looking for these candles at liquidity areas where you can actually spot liquidity. So right away you can see this was a very good example. We have the liquidity generated, then the candle wicked below it, giving us the bullish candle, kind of like an engulfing candlestick pattern. Then we actually saw the retest of the FU candle. See how price retested the FU candle perfectly. Then we had the bullish move to the upside. Very nice, very simple. Don't complicate things. So learn about these candles and you'll be good on the forex market.